Hello everyone, welcome back to How to Trade. I'm Shane Vernier and this is the ORB workshop. Today we're going to go over the ORB, the Opening Range Breakout strategy. I'm going to show you exactly how to trade it. We're going to look at some interesting markets and really give you a few different ways that you can really look into getting into this strategy with different goals, but also with a reasonable chance of success. Now, I get a lot of questions about the ORB. By far, it's one of the most popular strategies we have on our YouTube channel. I think that the ORB, the Opening Range Breakout, can be a fantastic way to day trade. You can even swing trade using it, take positions. It really just depends on your news cycle. And I'm going to go over a few different ways that you can do that. Now, I get a lot of questions. Does ORB work for commodities? Does ORB work for forex? We're going to show you a few strategies here that work on pretty much every market. The big thing you always have to remember with the ORB is timing, and we're going to talk about timing here in just a second. Now, right now, I'm watching gold futures. Full disclosure, I had a trade going, really looking to get into the market here, but we're going to be live streaming. I should execute it live, but right here, we're going to go ahead and wait. I really like that 34.22 area. I think that's going to be a pretty good resistance zone, and the reason why is because it's the top side of my range. Every day I go in with a range oscillator, and I project where I think the market's going to go and where it may stall out at. We had a pretty good trade earlier today in gold, and we got another pretty good sell right up there, right around 34.22, and that's June gold futures up about 2.9%, up 3%. Now, really remember, I'm a tick scalper at heart. That's what I do. I'm not taking positions. I have no interest in trying to call a top. I don't believe on a 3% market that you can even begin to call a top. And it looks like right here we're going to get involved. I was kind of hoping that this one would sort of hold off a little bit later on so I could execute it. But right now, we may blow high. We may stagnate right there. I think that's going to be good for a 10 pip, at least a 10 tick pullback, probably more like a 20 or 30. But definitely a good looking trade right there. So we're going to go over the everything we need to do to trade the ORB. That's not an ORB trade. That's a range trade. And I may make some videos and things about that moving forward. Okay, everybody, good to see you. Lewis, always a pleasure. Lewis, yeah, Lewis, good to see you. Bobby Bob, always a pleasure. Tuku, good to see you. All right, guys, let's just dive into this ORB strategy. If you have any markets that you'd like to look at, just go ahead and save them towards the end. We'll go ahead and I'm more than happy to give my outlook as far as my support and resistance levels for some of these more popular markets, but you just have to reach out and let me know either in the live chat on YouTube or if you have live chat access here in the How to Trade Trading, you can go ahead and reach out to me there. All right, let's go. The ORB, remember, if you want to trade any of these, head on over to switchmarkets.com. Check out a new shiny new account. You can get a demo account. You can get a live account. You have access to anything. Honestly, if it's moving, you can trade it over at Switch Markets. That's for international clients. If you're here in the United States and you want to trade a forex pair, you probably should head on over to Oanda. Oanda can get you up and running here in relatively no time flat. Okay, the Opening Range Breakout trading strategy. That's what we're talking about today. I get a lot of questions on this strategy. I like it because it's simple. Today, we're going to show you the exact easiest way to do this. Now, this is going to be the two-bar strategy, and I'm going to show you how to set it up. But before we even begin, we have to know when the opens to these markets are. Now, if you're going to trade anything, you always need to know when to trade it. Let's see, Moon. I made 600 using the ORB on the ES this morning. Yeah, and we're going to talk about the ES. I'm going to go ahead and pull that chart up. I was looking at a 30-minute ES chart, but you can definitely take it down to a 15. Let me see, Bobby Bob. Hi, Shane. What's your view on WTI? I think that it's in whipsaw. I'm very bearish towards crude oil, but I'll go ahead and break that down for you, Bobby, towards the end of the stream. If I forget, just remind me again. Dave, good to see you, Dave. All right, trading the open and the close. Remember, we're trading the open here. We want to understand when we need to get our ORB in, when we need to develop our two-bar ORB. These are the key times. Tokyo Open right around 8 p.m. Eastern. London Open 3 a.m. Eastern. You've got New York Open 9:30 a.m. Eastern, and then the New York close. We're gonna ignore the New York close. We want to know when the opening bell is on these markets. Now I'm going to go over a few different ways to trade some of your favorite assets here using the ORB. Maybe some things that you haven't thought of. Now remember, this is the two-candle ORB setup. Now, there's a lot of different ways that you can use the ORB. There's a lot of different ways to build an opening range that you're going to play that breakout out of. Now, originally, the ORB was a pit strategy. It was used by the pit traders. The pit traders in the open outcry pits, they would wait for a market to set up and have a couple of intervals of time, typically a half hour. That's what a lot of the futures traders in the NYMEX did in New York City. They waited for the first hour of trade. They wanted the first two 30-minute periods, and that's what would build their range. They'd say, okay, we've got a high, we've got a low to work with, and I'm going to go ahead and play a breakout accordingly. Essentially, that's the same thing that we're doing here. Now, the only difference between what we're doing here and what those guys did in the pit is, number one, our ranges are probably going to be much, much bigger. And if they're much, much bigger, you have to be very, very, very careful with how much risk you assign to each trade. Now, I get an absolute ton of messages on YouTube. I answer every single one of them. Some of them are great. Some of them are highly critical. Some of them are just out of left field with their critiques. One of the things that I always say on these live streams, big believer in the 1 to 3% rule. That means that you're going to wager 1 to 3 of your total account balance on any one trade. And what that'll do is that'll help you weather the storm. Just in case you take a string of losses, you can still be in the game. All right. I've been known to go as high as 5 to 7%. And for that, I got called an amateur gambler, and you don't know this and you don't know that. No, what I do know is this. I'm not a fund manager. I don't have $1 million ready to trade. And I get tired of people talking about, oh, well, a flat 0.5% is really all. You're going to need to wager more than that if you're a retail trader, and that puts us in a high-risk environment. Now, if you want to go in and you want to save your money and you want to make the $250,000 that you're going to need to get in there and really risk 0.5% on these trades, then be my guest. Now, the other thing they would say is you would need a great big risk versus reward to really do this correctly. I don't believe that either. I believe you can hit a real strong winning percentage while risking 3% of your account, 5% of your account, and be okay. A lot of people hate that. That goes against conventional wisdom, but believe me, when you've been around as long as I have, when you've been around in this market 14, 15 years, you do things your way because you understand what works. I want everybody in here after this workshop to take a look at the orb and say, okay, is it for me? Is it not for me? Okay, how can I make this work according to what I have? It's all about you. Remember, there is no classroom. You're not going to sit around in a class and take a test. You're not going to be tested on this later. The market's going to test you. You're either going to make money or you're going to lose money. If you lose money, you get an F. If you make money, you get an A. It's that simple. We're A's and F's. That's all I have to say about it. So remember, we're not academics, we're traders. Anybody that tells you there's a 100% right way to trade is lying to you. You've got to find the way that you have to trade to be successful. And that deals with your absolute, the amount of money you have, the amount of aptitude you have, and your personality. Those three things you've got to bring into alignment with your goals. We talked about that in this week's YouTube video. Not a whole lot of folks watched it, but it was a pretty good one. This can help you choose a trading strategy. And we just released it earlier today, but nobody's really looking at it too much. If you've seen it, great. But that right there talks about the self-inventory, talks about what you're going to need to do to be successful choosing a trading strategy. It's relatively straightforward. It's not very hard. Remember that. That's what you want to do. You want to do what works for you. It doesn't matter what I say. It doesn't matter what the folks on TV say, and it doesn't matter what a bunch of blowhards on YouTube say. It matters what you do. All right. Let's go ahead and talk about the two-candle orb. That's important that you get that psychology down. Lita, always good to see you, Lita. Let's see. Yeah, we'll look at the Euro USD as well. Let me see. Can you talk about synthetic indices? I'm going to Chad, I'm going to show you an ETF right now, and then we're going to look at some futures contracts on the indices. It looks like my trade's going to go, and I'm going to miss it. I'm not very happy with that. I've got a 34.21 entry, 21.5 entry, and it went to 3. So you're going to be looking at selling right there, right in front of 34.22 and getting the pullback. I really like that. That's not an orb trade. That's a range trade by Shane Vernier with the secret sauce. It is. I use a range oscillator overlay and work from the bottom of the daily range. Those things, this time of day, are money in the bank. They really are. Okay, but let's go ahead and rock it. Okay, we're trending a little bit higher there. 134. Yep, right there. There's your entry, and you're coming off immediately. Pretty good trade. All right, two-candle orb setup. Let's get on it. Let me see Elusive. Greetings, Professor. Is the orb strategy like CRT or global strategy? Please, no. It's not like CRT. In my view, or Globex. I mean, no. This is going to be one that I'm going to show you how to trade it on a gold ETF. I'm going to show you how to trade this thing on the E-mini S&P 500, and then we're going to look at the Euro USD. It's sort of a different video, a forex orb video that we put out as well. But we're going to cover a commodity, we're going to cover an index, and a forex pair. All right, two-candle orb setup. Any two first candles after the open. It's that simple. Any time frame. I get that question a million times a day, and I love answering it because the time frame is going to depend on you. It's going to depend on what you want to do. You want to use a 1 minute? Use a 1 minute. Understand this. When you use a smaller time frame, odds are you're going to get chopped out of the market more so than in others. Now, the trade-off there is short time frames mean you're not going to risk as much. Your stop loss location is going to be much tighter. That's key. That's absolutely key that you understand that. Okay. Any time frame, playing a breakout to a key level. Now, that's not necessarily, you don't have to do that. That's one of the ways that I like to look at the markets because it tells us, okay, where might we go? Well, if we break out of a consolidated range, potentially we would be in a position to run it maybe a previous day's high or low, maybe something like that. It's easy to think of. It's easy for us. So I always say that's a pretty darn good guideline to set up your trades with a nice risk versus reward. Or you can just make it a static risk versus reward, 1 to 2, 1 to 3, 1 to 4, or 1 to 1. Just remember, the lower your risk versus reward, the more wins you're going to rack up. The big problem you're going to have is, can you make it profitable? We're going to look at all kinds of trades here. Ideal for equities, commodities, and it may be applied to forex pairs. That's it. That's all there is to it. Right here, that's going to be our 920. Excuse me. Right here. Very simple. Find your orb, looking for key levels. You're looking for previous day's high, maybe the overnight high, maybe a previous week's high, maybe a previous month's high. Could be anything. All right, let's go ahead and take a look. This is one that I really wanted to highlight here because I get a lot of questions about, Shane, I want to trade gold. I want to trade gold. I want to trade gold. I'd say, well, if you don't want to trade gold futures and you don't want to trade spot gold, there's always CFDs, or there's always CFDs, and there's always these funds here, ETFs. You can always do things like that. Now, one of the things that the ETF makes easy for you is figuring out where the opening range is. Now, remember, this gold, this is GLD, this is an ETF, NYSE ARCA, 30-minute chart, Spider Gold Trust really mirrors the price right there. You can see your spot gold's right about a 34.12, and then you're looking at this ETF, which is right around 314, something like that. So what you are is just a sort of a divisor, I would say. You're just trading, gold's trading at a multiple of this ETF. Now, one of the things that you have to remember about ETFs is they do trade just during that U.S. session. And that's why a lot of this is very attractive, is because you automatically know where the market begins. A lot of folks get confused with that. I just showed you the chart, all the different trading periods during the trading day. Well, if you're trading strictly the New York session with something like an ETF, it's easy. Now, why do we want to focus on the opening ranges right after the open? 2 reasons. A lot of volume, a lot of liquidity. The market's deep. What does a deep market do for us? Makes us money. It helps us get in and out with maximum precision. It helps us get out with liquidity. It helps us get out because there's always going to be somebody there to take the other side of our trade. That's absolutely huge. So in the case of an opening range breakout, we want to see where everybody did business, and we want to base our trading decision on that. Okay? So what do you have here? 30-minute chart, ETF opens right there. Opening bell, ding, ding, 9:30 on Wall Street. Everybody's already got their Bentley parked, and they're inside getting ready to trade. Well, right there. There's your opening range 30-minute chart. Now, remember, what's our trigger bar? We've got to get a bar close outside of that range. As soon as you get a bar close outside of that range, then you're going to take the trade accordingly. Does this count? No, it doesn't count. Why? Because it's right on the line. Now, I know everybody in here is anxious to trade. You all want to trade. Believe me, I've been wanting to trade all day long. I hate, it's one of the things you got to figure out a way to deal with being patient. I don't know if it's just come back in and look at your opening ranges after they're done forming instead of watching them set up. This is not it. This is right on your lower opening range. We needed to see a close down in here to take that short, a leveraged short on this ETF, which you could probably do on a CFD contract as well. Right there's your rally. So where's my intro at? Boom. It's right there. Now, the biggest thing people get confused about is the opening range. Now, remember, that opening range, you just extend the lines. You extend the lines throughout your trading session. You've got to get a bar close either above your range or below your range. Now, you've got something right now, and you've got definitely something like this. You've got a nice big bullish move. Where's your stop loss going to be? You have 2 options. Put it right beneath your range, or you could put it right beneath your trigger bar. This is very tight. If you're going to use this type of a stop loss location right beneath your trigger bar, you're going to have to use time frames that are just a little bit larger. 30-minute time frames are a pretty damn good place to start. Not bad. It's not bad. So right there, there's your bid. So you'd have been bidding this ETF from right around 313.75-ish, somewhere in there, and now you're printing about 314.36. So if you were trading it, you would probably want to be looking for a profit target. Now, if this is your stop loss down here, all right, you're looking at what, about $1? Yeah, about $1.50 range. So a minimum 1-to-1 is going to be somewhere right up here. Something like that. Now, if you're going to go and really look to get that breakout runner, and you're going to do something like this and risk the entire range, you're going to need to get paid for your trouble. Now, the way that you're going to do that's relatively simple. Right there's your entry point on the bar close, right at 313.75. Down here is 311.83. What is that, roughly $2? We're just going to do some quick math. So what is it? If that's $2, we're going to be looking at 15.74, 16.74, something like that. 17.74. Now, this is what answers really everybody's question out there. Do I want to use this to scalp or be a swing trader? Theoretically, if you took that trade, remember, if you're buying an ETF, you may not even be leveraged on the play unless you're trading on margin. That's a conversation for another time. But if you're just buying this thing, then this really could be a swing trade for you. Take a look at what you've done. Your opening range, you essentially have locked in very near the bottom of today. You could be looking to hold this thing for 3 or 4 days. You might be doing something like this, saying, okay, I really like the Fed coming on tomorrow. I'm going to put this ETF up there right around 320, and I'm going to let this thing fly and see if we can get a big play in. The problem with trades like this is that they don't succeed as often as, say, something like this, where we bring it down to, say, a 1-to-2, or maybe even a 1-to-1 risk versus reward. It's very important that you get an idea in your head of what you want to do with your trading. You can use this orb to scalp. You can use this orb to position trade, day trade. Typically, that's the most popular way to trade it. You can also use it to swing trade. I don't have any problem with anybody showing up on this GLD ETF and going long and saying, okay, I'm going to hold this through the Fed meeting tomorrow, and I'm going to try to get in on a big runner. I got no problem with that. I don't have any heat with that. Do we think that we can do any business to the top side here? Yeah. You've still got an all-time high. This would be a good example of your key number. 317.62. We bought right in there on our 30-minute range. $4. Risking what? $1? Something like that. See how flexible this thing can be? All right, let's take a look at a couple other examples here. But I did want to show you that GLD ETF. I'm not necessarily too big on ETFs. I don't like the maintenance fees. But one thing they do with the orb is they give you clear-cut opens. U.S. Open. That's all you got to think about there. A lot of different ETFs to look at, too. Let me see. All right, I am so far behind. All right, hello. So the best time is 15 minutes. Yeah, Lucas, I'm going to show you a 15-minute and a 30-minute here in just a second on this E-mini S&P 500. Sort of, I can see right away what we're going to be dealing with, but we're going to go ahead and go over it. Let me see. Must the bar close be on the 30-minute? It's got to be whatever time zone you're looking. The bar close has to be outside of your opening range. I'm going to break down another one for you here. Let me see. Lewis, I've been watching Forex Signals and how to trade for over 5 years now and pop in on the YouTube and website lives. Don't copy their strategies. Use them instead to build your own. That right there is the key. You take the strategy, you take what you want out of it, and you move on. I would love it for everybody to look at the orb and say, Shane, I don't like the way you're doing it. I found a better way. And then come back and just argue. There's nothing wrong with that. Guys, there's nothing wrong with that. And that's what this is all about. It's about freeing up your creativity and getting the ball rolling, giving you a place to begin. And if you have that place to begin, then you start building things with your orb. We're not even going to cover confirmation on the orb in this website, in this webcast. I'm not even going to go there. We're just going to build basic orbs and show how to execute these trades. Your success will depend on the time frame you pick and the market you pick. Remember that. I'm a big futures trader. That's what I want to do. Let me see, Lucas. I think we have to wait till the candle outside of the range before we take a short. Absolutely. Take a short or a long. Okay, this right here is the E-mini S&P 500 futures contract. It's the most popular futures contract in the world. Trades almost, these days, you're looking at about 2 million contracts a day. It's incredibly liquid, incredibly volatile, and there's a lot going on here. So let's go ahead and take a look. Now, 30-minute chart. This would be sort of your bread and butter. I got a question that came up in the live chat. Shane, can you use a 15-minute? Is the 15-minute the best way to do it? Well, think about it in terms of even divisors. Meaning, if I use a 30-minute chart, I'm looking at the first hour of trade, 2 bars. If I use a 15-minute bar, I'm looking at the first 30 minutes of trade, 2 bars. There's nothing wrong with either way. I would believe that the longer the time frame you use, the greater success you're going to have. But using that 15-minute time frame really limits your risk. It cuts you down, and you can play sort of a breakout outside of that opening 30 minutes range. And I'm going to show you what I mean right now. Okay, it's not hard to find these. The big thing you do is just put a volume indicator on your chart, and right there you can see once the volume picks up. That's why we don't typically trade overnights. It's just too damn hard, especially with futures contracts in the U.S. indices. You want to be trading when everybody's in the market, and right now they're in. Okay, so you've got 15-minute bar. That's your opening bell, 15 minutes. There's your second 15-minute. Opening bell, ding, ding, and then the next half hour of trade. This right here gave you a pretty good trade. That's your range. Okay, so in everybody's head right now, go through and determine where your entry point is. And remember, this range is not going to change all day. When price is in your opening range, you should know it. Okay, opening bell, first 15 minutes, we saw bullish price action. We saw whipsaw there. Then we saw an inside bar. Love it. Absolutely love that setup. Where's your entry? Right there. The bar broke outside of the range to the top side. That's your trade you're buying. You're playing a breakout runner to the top side. That's all there is to it. Where's my stop loss at? You have 2 options. First option's beneath that range. Second option would be a lot tighter, and it'll be right there beneath your trigger bar. This was a pretty good trade. I mean, we can see it. We can see it right here in the live chat. Let me see. More Moon 67. I made 600 using the orb on the ES this morning. That right in there is where you got it. So when we're looking at that, we're saying, okay, there's my break. Okay, if this up here is my entry and this is my stop loss down here, then I'm still in the market. If I'm playing right here, I already got my 1-to-1. I already got paid off. So the next question we're going to have is we've sort of got our tentative stop loss locations. Where would we put our profit target? Now, that's why we sort of leaned on the key levels to be an area where we could really attack. We could try to get in and potentially find out where this market's going to go. Let's look at our daily. Okay, what's my daily? Previous day's low, previous day's high. We opened right here, sold off, and now we're bouncing. I would be looking at my overnight high right now. Why would I be doing that? Because I would want to know exactly how much room there is before we can get maybe potentially either a full-blown market reversal or maybe the beginning of a new trend. So if we're using market structure, we're looking at the 5th of May, Cinco de Mayo. That right there is right after the electronic open. You're looking at something like that. It's going to be your high. So if that was your key level you were shooting for, you're in right here, bang, bang, you pretty much got it. So the question now becomes, if you held this trade and you're now in negative territory, why did you hold this trade, number one? And number two, what were you looking to do? Were you looking to get right in here? Maybe you were looking for yesterday's high, something like that. I mean, those areas would be your take profits up there. You see where our entry is. You see where our stop losses are. If, in fact, you were going to play this very tight right beneath that trigger bar, there's your breakout, there's your stop loss. I mean, you've got a fantastic opportunity to take a 1-to-1 right there, 1.5-to-1. If you held and didn't take any profits off of that big runner, where are you at now? Well, you're in trouble. The market, you've given back all of these gains. It's coming back against you, and now we're trading inside the range. If you're not going to get out there, you're going to be right down here, then you might be all right. At least you're in position for maybe a late day run. Could you use this maybe to be a swing trade? Yeah? You got Fed Day tomorrow. Could be an interesting type of a dynamic. Would you have an opportunity maybe to get to maybe catch a big runner here? It's very possible. Just depends on what the Fed does. So that's how you would trade the U.S. Open. 15-minute chart, pretty darn good. Really a pretty darn good trade, and I can see why we got some profitable trades on that. Let's look at a couple more of these. Let's get a forex trade next. Let me see Mormon greed. Yeah, I don't do greed. You know, if I get a decent move, I definitely try to step in and get it. The 4-hour OB check. Yeah, I'm going to go ahead and show you how to do that one, Satoshi, and we're going to begin right here. WTI. Yeah, absolutely, Bobby. Right towards the end of the stream here, I'll go over both of those. All right, this is going to be a good look at your Euro USD orb, and this is the first kind of orb that we talked about on the forex video. A lot of you may or may not have seen it. It's on our channel. It's on our How to Trade channel. And then right here, the forex orb. A lot of you liked it. Got a lot of great feedback on that. Be sure to check that one out. That's what the first orb strategy is here. It's a 2-candle orb right after the weekly open. Now, this would be a pure swing trading approach, in my opinion. I think that you could swing trade something like this and be pretty good at it. It just really depends on how you want to execute. Maybe you just want to make it a pure day trade for Monday sessions. This is easy. So after that electronic open on Sunday, you're going to be looking at the 4-hour chart, and the first 2 bars are going to give you a range. This one really is designed for the forex. You can have 8 hours of trade, and a lot of times that's fantastic range to work with because the forex doesn't really move as much as some of our other commodities do. Something like this, spike low, spike high. There's your break, okay? Something like that. That would have been your entry. Where would your stop out have been? Beneath your range? More than likely, that's a pretty good area. You got a nice run up. Did the trade work, though? Nope. You got caught into a reversal right there on that U.S. Open, on the Monday U.S. Open. Big reversal came down and knocked you out of the market. That would be a situation where just ripping the Band-Aid off and taking the loss, that was really a challenge because it came down and knocked you out, and now you're back on the bull. That's hard, guys, and that's a part of trading that you really, really want to avoid as much as you can. And if it does happen to you, you just got to move on to the next trade. That can be very difficult to deal with. Was it a good trade? There's your first bar, bang. There's your second bar, bang. Oh, man. Actually, no, that's not true. This one right here was the end of the May. So your orb would have been this. Would have been the same net result. Would have been right there. You'd have started on the 4th of May, which would have been Sunday. That would have been your orb. So where would you have traded it? Right there? Nope. Right there. You would have bought the top, got reversed out of it. That's tough. That's a tough trade. Especially now that you see which way the market's gone. You got stopped out there. If you played it tight, right in here, you got knocked out right on that U.S. Open. It's hard, though, because the market's definitely moving. The other way that you can do this is you can look at your pair and be pair specific. Now, this would be probably one of the better examples I could come up with, which would be the dollar-yen. And you can take it right down to, say, a 30-minute chart. Now, the biggest thing you got to do is you got to figure out when that Tokyo Open is. So if I was going to trade the dollar-yen sort of exclusively, I would have to get a good idea of where my orb was going to begin at. Now, remember, we sort of put this out on the best times to trade. We had the sort of the opening schedule here. So if I was looking at the Tokyo Open, it would be 6 p.m. my time. So if I was going to be looking at that, I'd say, okay, where am I looking at here? I want to go yesterday, 6 p.m. Right there. So that would have been 6. And then the next 30-minute, what do you got there? Sort of another loser, don't you? Market finally breaks and gets away from you. Could you use a 4-hour on that after the Tokyo Open? Sure you could. Is that a better way to do business? Well, maybe. Just depends on what you want to get accomplished. So if you were going to do that, how would you design the 4-hour chart? It would be really hard. You'd have to begin almost after your opening bell in Tokyo. So it would be the 4 hours that encompasses the 6, or excuse me, the 8 p.m. So you'd be looking at really the first 8 hours of that Tokyo session, and then you would be looking to sort of enter the market to whichever way it breaks. That's a trickier thing. That's a longer time frame. I recommend longer time frames, but when you use the longer time frames, it turns into a swing trading type of an environment. If you want to use it to scalp, you have to use the tighter time frames, like the 15-minute, like the 30-minute, maybe even like a 5-minute. So the forex is a little bit different. Like, let's say we wanted to trade the Great Britain pound USD. All right. Now, 4-hour chart's going to be relatively difficult. Let's take this right down to a 15-minute chart. Now, I'm going to have to know when to target this. And the way that we're going to target this is we're going to have to figure out exactly when the London Open occurs. Well, remember, we got it right there, 3 a.m. Eastern. So it's going to be, I'm in the Mountain Time Zone, so it's going to be 1 o'clock p.m. my time. Where would that be? Right there. So my 15-minute orb is going to be somewhere right in there. There's your entry. There's your first candle close outside of the orb. Stop loss beneath the orb, and you hit a massive winner. A lot of different ways to trade this, guys. A lot of different ways to trade it. Find one that works for you. Just remember, opening range breakout, timing is everything. Timing is everything. All right. I think that's enough orb setups here. Just remember that this one's an interesting one, this GLD. This is definitely one where there's no guesswork. You see exactly where it opens. You wait for the range to set up, and then you just take it accordingly. As far as the E-mini S&P 500, once again, a relatively straightforward strategy. It begins at 9:30 a.m. Eastern. If you want to use the 15-minute or the 30-minute, that's what I would recommend if you're going to be day trading. I think that if you go any lower than 15 minutes, you're going to run into issues just because price action's so choppy, typically in that first 30 minutes. And then if you're going to trade Forex pairs, number one, the first way to do it is just the first 4-hour chart after that electronic open on Sundays or Mondays, depending on where you be. But where the weekly open is, you're going to look at the first 2 4-hour bars after that. That can give you a pretty good way to position trade. And then if you want to go tighter time frames, 15 minutes, 30 minutes, something like that using the Forex, you've got to know which pair you're trading and how it's going to be influenced by its own market open. So if you're going to trade yen, you got to figure out when that Tokyo open occurs in your time zone. You want to trade Great Britain pound, you're going to have to figure out when the London open is, where you're at. So you definitely want to be aware of those time frames. That's a bit more complicated, but it can be done on Forex pairs. Okay, we've got a few things that we'll go ahead and look at here. This is interesting right here. This is the scalp that I missed because we're live streaming, and I'm not happy at all with this. This was one that really should have waited, but it went, and it was beautiful. I mean, that right there is what we were looking at. That was our entry. It was 34.21 and a half. And we just sold off right down to 34.18.3. That's 25 pips on 2 lots. That's $500 relatively quickly. Since then, though, we have rallied, and the uptrend in gold is still very much alive. So we've got some questions here on WTI and the Euro USD. So I'll go ahead and just give you my outlook and sort of let you know what exactly I think of these markets. Daily market, this is sort of an idea that I put out yesterday. You can start to see crude oil is very disjointed right now. We really don't know if we're looking at the top side or the bottom side. Spike high right there, spike low. And what do you got? Well, you got something like this. You got these resistance zones set up. And in my view, though, any of those shorts you're going to be just fine with it. So for today, I would absolutely love to get an opportunity to sell my moving average, but that's up there at about 60.21. I doubt you're going to get that. We had a pretty good run at it earlier today. 59.79 was our top side print. I was really waiting to sell 60s aggressively. Just didn't quite get a chance. But moving forward, I'm still a seller in this market, even though we are rallying a little bit. This area right up here is just fantastic resistance. If you're looking at 60.46, and then you've got your EMA, your 13-period EMA, which 60.21. That one right there is absolutely fantastic, and you're gonna be able to grab some resistance right off of that level. So I'd be looking to sell there. Do I want to buy right now? Not really. If in fact we do buy, no pun intended. Spike low to a spike high there, 58.49 to 58.09. It's just too big of a range. So to look for a support zone in this environment, or we may be able to get one right here. I like this area. It was resistance. It's now going to be support right around 58.50. So if you're at a spike low, something like that, spike low, and then there's your spike high on a 4-hour chart. It's amazing. I love it when a plan comes together. 58.50 right in that zone. That's probably going to be your bid, late day bid. You've got about another hour of WTI crude oil trading, premium trading. I would be watching 58.50 relatively closely. All right, we got a Euro USD. One last request here. This was a trade that I was very excited about, and I put this trade ID out multiple times, and we just missed our entry just barely. I still love this weekly Fibonacci sequence. Spike low, spike high, beautiful support zone right around 38%, which is right around 112.50. If you get an opportunity to buy 112.50s, you almost have to take a shot at it, even with the Fed meeting coming. But I would be very careful, guys. The Fed is going to do everything to these markets. It's not going to leave one of them untouched. It's going to be a very difficult environment, probably coming over the next 24 hours. As a personal rule, I will finish out today trading. I won't trade tomorrow. My last two big losing days that were in the four figures have come on Fed days, and the price action's chaotic, and a lot of times you see trends for no reason develop, and they develop fast. I'm not even remotely interested in trading tomorrow. I'm going to be back with FOMC Live. We're going to cover Jay Powell and see if we can get a beat on what the Fed's going to do in the near future. But something like this, 38%, 112.50 is pretty good. If you wanted to trade right this minute, you probably could get away with a pullback bid potentially. You can just see that we were just right on that level, and now we've broken to the top. I still just see massive rotation here. I think there's a lot better markets to be trading, but if you want to take a shot at it, something like this maybe on a 4-hour chart, it's just really tough. It's tight in there. We've broken to the bull. I think you still got to be slightly bullish on this market, but we just didn't quite get the trade location. I would rather wait for 112.50s, 55s maybe to take a shot to the top, but if you get maybe a 113.50, you could try to scalp to the long side from there. You got about a 1.4 pip spread there, 1.5 pip. So you're going to have to figure out a different way to execute the trade to make it worth your while. Probably looking for like 12 pips, something like that, 10 pips. You might be able to pull that out of that. Not the best trade in the world there, though. I'd probably be passing on that. I want to see the market move a little bit before I get involved. And unfortunately, we just missed our premium entry. I mean, that low was 112.65, and we were right down here. Just didn't get it. That's trading. All right, everybody. I'm going to go ahead and sign off here. Lewis, I feel like it could help. I feel like it could make it to take profit, and we'll go to 1 minute and scale into the 15-minute take profit. You can certainly do things like that. You could scale in, and there's nothing wrong with it. There's nothing wrong with scaling in. It just gets complex. Moving things to break even, scaling into markets. It's one of the biggest problems with those strategies is staying consistent. If you're going to move to break even, if you're going to do all that, if you're going to scale in, if you're going to wait to break and then wait for a pullback and go longer, that's great. It can all work. It can all work. The problem is being consistent. All right, I got a couple more questions and I'm going to sign off here. T Marina, good to see you, T Marina. All right, hi Shane, Ig T. What's a realistic turning point or a realistic starting point for trading futures? The first thing that I would recommend, T, is to get some basic education. Basic education. So that would be just Google some of the terms, take a look at what margins are, what maintenance margins are, when the trading hours are. That's key with futures. You'll notice that the maintenance margins, the overnight margins to hold through a daily close, for full-size contracts, they're really large. And you've got to figure out which contract you need to be trading, how much money you have, and what the margin requirements are. And then you need to get used to the speed of the market. A lot of forex traders that try to make the transition to futures really struggle. And the reason why is because the futures market is a lot faster than the forex market. The forex typically sort of plods along unless you have a big news event. Futures move faster. So what I would recommend is some basic education. Check out Investopedia, Google things like margins. I mean, I think I've made some videos in the past. I might make some futures videos, for the near future, just to sort of expand our scope. But best place to start is basic education, and then start getting into the markets. Trade the micro E-minis, which if you're in a stock indices, those are the micro contracts that the margins are very, very small, and your risk exposure isn't that great at all. You also have a micro gold contract. They have micro crude oil futures. You can do all of it and just trade for a few cents a tick, which is what I recommend. And then once you get all that going in the right direction, you pile on the leverage and go get them. Yeah, let me see. Thank you, more man. That's for sure. Yeah, I noticed that after basic ED on futures, what's a good amount to start? Oh, you talking about money? I'm skeptical of most brokers, especially, you know, the thing to remember about futures brokers is the introducing brokers. You know, they're all licensed at the exchange. They got to carry a license, and they're all regulated by the CFTC here in the United States. That makes it a little bit different than OTC markets. But if you're asking me how much money do you really need to start with, if you don't have any money at all, I would start with prop. There's some prop firms out there that offer real cheap programs to get in and get funded. That's what I would recommend doing. However, if you're talking about trading cash, you know, if you want to trade the micros, you could probably get started for a couple of thousand, I would say. Personally, I don't let brokers hold much of my money at any given time. They hold what I need to trade, you know, 5 lots, 6 lots, 7 lots, and typically not much more than that. That's just an old habit I have. So if you were going to go in and trade full-size contracts, you can do it for $5,000 to get started with. If you don't have anywhere near that much money, you go to prop firms. I'm not going to promote any of them here because I won't vouch for them. But there are prop firms out there that they have those real cheap funded programs. And if you're serious about getting in there and getting going, that probably is the best way to do it if you don't have any money. Now, if you have a lot of money, you know, if you've got a couple $100,000 in your bank account, then I would put 10 or 15,000 in and go trade and see if you can handle the swings and see if you can handle the pressure. Personally, that's what I would recommend. But you can start a lot smaller than that with the micros, guys. You could start with 1,000. You can start with $500 if you want. I mean, anymore, I think you can open an account with nothing and then fund as little as $50 and get up and going with $50. To me, I'm old, guys. I don't sit there for $50 anymore. It's got to be worth my time. So, but if you're just getting started, start small. Basic education, start small, build your account up over time, and then add leverage. Add leverage as you grow, and you'll find you'll get to your goals a heck of a lot faster than you think. That's for sure. All right, everybody. Let's see. Team Marina, start with the micros. I would recommend starting with the micros. 4 contracts. You got E-mini S&P 500, micro E-mini there, micro E-mini NASDAQ, micro E-mini Dow. You can do those 3. That gives you the U.S. indices. You can do micro gold. That gives you gold. You can do micro crude oil. That'll give you crude. And then you could also go with, I believe there's a micro Euro FX. There's a micro Euro USD that mirrors the Euro USD contract, and you could pretty much trade that through the futures. That's what I would recommend. Just get started. I don't want to see anybody go in there and lose $100,000 not knowing what they do. Because, you know, sometimes in life you feel like, well, I'm making big money, so I'll get another 100. And a lot of times life happens and you never get the 100 back. So go slow. All right, guys, I've droned on long enough. I'm going to go ahead and sign off. Be back tomorrow with the lovely Jerome Powell. I can't wait. Absolutely can't wait. I'm interested to see what he's going to say. Trump's going to blow him up in the media. I guarantee it. So it's going to be a good day. We're going to have some fun tomorrow. That's for sure. All right, guys, that's a wrap. We're going to be back tomorrow bright and early at 2:20 Eastern. So if you have any questions at all, be sure to swing by How to Trade. Leave me a private message. Thanks, everybody, for watching. Check out this week's YouTube video. It's going to be a pretty good one, I think. If you're having trouble finding a strategy, we sort of try to point you in the right direction. All right, everybody. All right, I'm signing off. You guys trade well, and we'll talk soon. See ya.